Thank you, Alicia. Appreciate it. I'm going to go ahead and share my screen. And I did want to let you know that there is the worksheet there in the Dropbox if you want to print that out, kind of help you follow along a little bit or take notes. So I am sharing my screen and let me go into share mode. All right, so that seems to be working. Looks like everybody can see it. Yeah, the worksheet has just some kind of a little bit fill in the blanks. One of the things that's really nice about the worksheet is there's a link to some forecast templates, which I'll be referring a little bit to today, that I use when I go work with clients. I mean, it's one of the first things I do is literally take their current financials that they have that they're running and drop it into this financial model, and then use that to really learn a lot about the business, but then to help them forecast where they're going, and from a revenue, expenses, profitability, cash flow, all that stuff is in there. And so I'm just giving you, there's a template that's blank. There's also one that's filled out with a kind of couple examples actually, and some instructions all in there. It's just so if you were to click that link, you can get that also. And I don't know why, but for some particular reason, my little clicker will decide it doesn't want to work anymore, and then it's like if I don't use it for 3 seconds, it stops working. Okay, so what I want to talk about is just first of all what business owners might be dealing with right now. Maybe there's possibly a lack of cash. I mean, usually cash is one of the biggest concerns of any business owner. So, or just kind of stress, frustration, some kind of chaos in their situation, or maybe just difficulty making decisions. And one of the things that I've experienced a lot over the last couple of months is just taking that forecast model that I just mentioned. Every one of my clients is wanting to look at different scenarios and what happens if this happens or that happens. And so that has been pretty common. And so it's hard to make good financial decisions if you don't have some tool like that. Otherwise, you just have to kind of use your gut. And so that's been difficult. And then maybe just being able to how you use your resources best, whether you need to hire people or maybe you have to let people go. All those decisions are difficult and without some measure of guidance. But I believe, and that's why this particular presentation I put together is I believe all business owners can have a financial IQ. They can know a certain amount of information to do this. I mean, they don't have to be experts in finance. I mean, or you still got your CPA and your accountant to help you, but this is important for all people to know. You can have better cash flow. You can have a little more peace and control. And I have a story about one of my clients where we'll talk about later that has told me that many times about a lot of fear and concern he had, but being able to have a little more guidance and trajectory, you can have a little more peace about where your business is headed, and you can have more clarity. You can make better decisions, and so I want to share some of that with you today, how you do that, and really around 5 steps to doing that. And it really does start with the financial mindset. And I think with a lot of business owners, what happens is they just don't have the right financial mindset about this. And the best way I can describe this was a situation I had, and this is my Toyota Camry here, 2009 Toyota Camry with 150,000 miles on it. My wife would drive it sometimes, and she would tell me that the headlights were horrible at night. She couldn't see. She didn't want to drive it. And then my son, who just turned 16, he was using it to learn how to drive. He had to get a certain amount of nighttime hours. And so he was saying, man, it's horrible. I can't see with your car. He didn't want to drive it. He wanted to drive our other car. But this was going to be his car. In fact, it's now his car. He just turned 16, so he uses this. But one morning I woke up, it was before this whole quarantine thing started, and I woke up and it was raining. It was 4:30 in the morning, and I had to drive to this is place where it's called the Vaughn Lane bus. I don't know if you've heard of it, but it goes out of Love Field and it'll take me down to Austin. And so I had to make the 6 o'clock bus. And so I'm driving here in the pouring rain to this place near Love Field. And I couldn't see anything. I mean, the headlights were horrible and useless. And I knew this was a major problem. I had procrastinated long enough. So I go take into the shop and they're like, you don't really have a headlight problem. The outside casing of your headlights needs a restoration. It's blocking your view. It was all kind of calcified and white and milky and just blocking the view. And so this is after they've done the restoration and it's really a lot cleaner and the headlights are working better. So I was like, well, why? And it wasn't even that expensive to do this. I just had procrastinated. So it really kind of works a lot in business. I mean, this was an analogy in the sense that many times we're just kind of working in a situation in our business where we don't really know what's going on. We can't see that far ahead. We don't have good vision effectively. And that does create a problem. And many times it just a few tweaks here and there and a better information, and you can have a lot better vision and you can make better decisions. But I think people do have a poor mindset about this. And maybe this is a situation where you feel like you don't know accounting or you're not good at technology or there's some kind of issue with, I'm just going to deal with that later. I'm going to delegate that or hire somebody later when I'm bigger business and I'll just, push it down the road or too complicated. I mean, these are the kinds of things that I hear a lot, but the problem is that you have to know a little bit of accounting. You really do need to know how to read a profit and loss statement. And I'm not saying you have to know every little piece of it, but if you don't know how to read that, that's a problem. Or a balance sheet. Using QuickBooks or different technology, it's not that difficult. I mean, all these people, everybody's had to figure out how to use Zoom and all kinds of technology the last couple of months. So you can learn technology, and it can be. And I think that is something that you have to embrace as a business owner. I mean, 96% of businesses don't survive 5 years. And that's, there's different statistics on that depending on what, how many years you go out in businesses. But I mean, that means that 4% survive. I mean, that's a horrible statistic. And one of the things I like to do as a CFO is I would love to just increase that percentage to much higher, than 4%. But I promise you that the 4% probably have at least an understanding of their financials. I mean, that is a common, it's not the only thing. You got to have sales and marketing. There's a lot of pieces, and we're going to talk about that too. But just having that understanding of how to read your financials and know how you're making your money, where you're more profitable, less profitable, it helps. The thing about waiting to hire somebody until you can afford it, well, I am all for that. I'm all for the different kind of, I can say finance and accounting is not necessarily in everyone's desire zone. There's a book by Michael Hyatt, Free to Focus, that talks about you want to do things in your desire zone, which is things that you're proficient and passionate about. But sometimes the problem is that you still have to know your accounting, and maybe accounting and finance is not in that zone, but you want to know enough so that when you have money to hire somebody, you know how to ask them for information. Like, this is the information I want to see, or this is what I want to look at, or you don't really want to give every piece of your financial guidance to one person. That's the definition of how fraud usually happens, because one person does everything and nobody knows what to look for, so you do want to know something. And so I just always encourage that little bit of education there. I do. What comes on next is, maybe people are focused on closing your business. It's all about revenue. And I do think that's hugely important. And that's where I'm going to talk about step 2 in this particular, these 5 steps, is implementing a revenue plan. Now, this isn't really specifically about sales and marketing. Sales and marketing is huge for small businesses. So I fully understand how important this is. And that's why, really can't move on until you actually have a good revenue plan for your business. It's hard to kind of focus on cash and expenses as much. One of the clients, one of the companies, actually, this is before I started my CFO service firm, which I've been doing for over 4 years. But this is I worked in the corporate world and small and large businesses for the last 15, 20 years, or 15 years before I started my business. And I was working at one company that I had moved from being an assistant controller of a $200 million company. It was electronic distribution. It was pretty safe, more a safer type job, to this high risk startup, basically, as an online marketing company. Now, this is 2005. So online marketing on Google was still very new. People didn't even really know what I was talking about when I said I was doing online marketing. I had to really explain a lot in 2005. So this particular company, when I showed up and started looking at their financials, I realized, oh no, they are not profitable, for one thing. Their revenue wasn't that great. It was actually much less than I thought it was going to be. And then they also had one customer that was 75% of their revenue. So all that was just like red flag. And I was like, oh no, I made a mistake. Maybe I need to go back to this other company I was working at before. But one of the things that I stuck around, actually ended up being there 9 years, but what happened is I looked at their financial model that they had. They actually had one, and they had a pipeline of all this new business, all these opportunities that they were working on. And I was like, man, maybe as of right now, things don't look good, but they have so much potential. Not only that, but the market, it was an online marketing, and everyone knew that was it was most likely going to blow up, going to just be huge. And it has been over the last 10, 15 years. So I stuck around. And one of the things they did was they had this pipeline. Here's an example of what I'm talking about. And this is where, if you were to use those templates that are out there, that I was telling you on that worksheet. So the worksheet, at the bottom, you download templates, and here's an example of what it's kind of more of the prospecting tab. And if I have time today, I will go and we can look at an example, kind of look at those templates and kind of show you how that works together. But one of the things I would say any company should do is just have an understanding of their current clients, their current revenue, how you're currently billing and how you're billing forward. Maybe this might be pretty normal to you and think, oh, surely everybody does this, but no, that's not the case. I go into businesses all the time, and I'm like, wow, y'all don't even know what your current contracts even say. They're not even billing regularly, or they're not billing monthly, or they don't. So that's one issue. Or prospects. Just listing all the opportunities. This example where you can list the prospects, your services, what you think the annual revenue would be, when you think that might close. This is just a normal business pipeline type report, the probability of close. But all of that kind of thing would feed into your model. And so now you have, ultimately, when you're trying to figure out your revenue, you have what you would call existing revenue that you currently have, that you have contracts for. And this is more service oriented. You could do this a little different when we're talking about product-based businesses. But this is more of a service-oriented view of, okay, this is what you currently have agreed, and you're going to be billing this monthly, and you're going to get the cash in regularly. And so how that trends out, and then tack on all that, your prospects. One of the things that I've experienced in this last few months is most of the businesses' pipelines have sort of kind of dried up. This list might have been nice and long, opportunity, and then all of a sudden COVID hit, and it's like no pipeline. So I've experienced that with pretty much every one of my clients, so don't feel alone. That's just been part of it. But it doesn't mean that, you still have to go and build it back up, and figure out what will work in this particular economy. So even though we're in a different economic environment right now, it doesn't mean that this principle still doesn't matter. It's just, fortunately, as of right now, we're seeing things start to open back up, and seeing situations where you can meet people in some settings here and there more. So it's opportunities to build the pipeline are starting to increase. So that's helpful. So this needs to just happen, and you continue to work on it as you move into the second and third quarter of this year. So then the third step. So we talked about revenue. I know I talked about revenue fast, and like I said, at the end, if we've got time, I just want to make sure I can get through this. At the end, I can kind of show you the templates a little bit more, how that works. Pruning. This pruning works very well in nature, and I think it's a great analogy for businesses. Every once in a while, you do have to prune your expenses. You have to analyze, know what your expenses are, and in a sense, prune them, cut them, at least in the right areas. I have a newsletter that goes out, which you can go to my website and sign up for it. I try to send it out every week or so, a week or two. The newsletter I sent out today, and there's an article there on the website. It talked about who really, I was writing out who will survive, who will be the winners in this recession, who will survive the recession better than others. And I'd done this kind of researched this Harvard Business Review article that had said that there is a certain combination that survive better. And some people think, oh, I'm just going to invest, throw all kinds of money and try to gain market share. And that's one strategy. And then there was another strategy that was the pull back, cut all your expenses to the bare bones, just to kind of survival mode to just get through it. So apparently, according to that article, both of those strategies are not good. Not the most effective. The better effective is sort of this more hybrid approach, in the sense that, and it does make sense, but it's trying to figure out what the hybrid is. But it's you want to cut, obviously, expenses that don't provide you as much revenue or maybe no benefit whatsoever. Every business probably has a low hanging fruit. When they go in there, it's like, I don't even know why we're spending that money. That's just useless. We should cut that right away. And then there are expenses that are kind of questionable, and this might come around. This is where, in the CFO and what I do, sometimes you have to drill a little bit further into the income statement and be like, okay, well, these particular clients are not very profitable. We're finding that we're spending way too much time on these clients. And so once you start to look at the margin on that particular client, and margin being your revenue, minus your expenses, the direct expenses related to that client. So that would be the margin that I'm talking about. And that particular margin is really, they're not hardly making any money. It'd be better if maybe they didn't even have that client, or so there's some of that analysis. Can be the same thing with products, can be the same thing with services. And so that can be where you can look at your expenses a little more carefully and understand, where you can get some improvements. So that's usually where you're more successful in business. So then investing in areas that are more profitable, not investing or decreasing your expenses and less profitable, that helps you in a recession too. So what I mean by pruning, and I wanted to tell you a particular story, actually, or a particular example. It's not really a story. I actually had this as a client, and they came to me about a year and a half ago, and they were. I found out later that he wasn't even sure if he was going to make it the following year. He had acquired a business, but he just didn't feel real comfortable about once he started getting into it over the few months, he was like, this didn't look as good as he thought. So I started working with him. We put together a forecast model. We looked at his contracts as over the next 12 months, how things were going to look. And it wasn't extremely profitable. It was very low margin. He could make it work, but if he lost a client or two, he was going to be in trouble. And so it was definitely not as good as it could be. But then, and I kind of told him that we need to cut some expenses in a few areas. And of course, I always say you need to focus on business development, marketing, and growing your top line. That's just always needs to happen. But what happened, it was about December, and he was in a cash crunch. And that's what really put him in where he kind of back up against the wall. He needed to make some decisions on the expense side. And we ended up looking at And this was more of a staffing expense decision, but we ended up noticing that there were about $65,000 in expenses that was not really, that he didn't need to spend. It was extra expense. We could reorganize that expense, and he would save money. And we ended up saving $50,000 from his annual expenses from reorganizing some of that. And now he actually has better information. It's actually, the pruning worked. And of course, with pruning, when you cut expenses, or if you cut, say, a bush, the whole point of it is that it comes back stronger, right? And so that's what happened for him. He got more comfortable. He had some more margin in his business to invest in other areas. And so that was something he had to do. He really struggled doing it because it was some hard decisions. Not all expense cuts are easy, right? Some of them are just like, oh, we don't need to pay for that. That software we haven't been using for a year. That's an easy decision. Then you've got some staffing decisions are really difficult, but that had to happen. And so that's an example of what I mean by pruning. But he's told me recently, we do this. Actually, I have a call with him today. Every month we have a call to go over the financials, and he told me that, I'll go through the financials with him. He'll look at the model. He'll look where his forecasts are, and he'll say things like, "Man, I can have a much better weekend now. Like my weekend's going to be a lot better." Because I think in his head he just thought everything was gonna everything was going down the toilet. It's like now he looks at this and he's like, oh wait, I'm not, I'm gonna survive longer than I think. So that gave us some more peace. Expenses that matter. This is just in any particular income statement. You would have some of these. If you're a product oriented business, you have cost of goods sold. You could also break out cost of services too, if you're service oriented, to understand between your operating services, your overhead services, and your direct client type services. You have personnel expenses. There's so many things that fall in there. Your salary, your it could be bonuses, 401k if you're large enough to do that, or if you're doing that for employees, insurance. All of that falls under commissions, even contractor expenses. I usually put that under personnel. If you're all of your personnel related expenses go in there, and then marketing, website, any kind of online type marketing could be there. Sometimes software, sometimes depends on what the software is for. Like for example, customer service, CRM type software. Sometimes I consider that marketing. Training and development. I mean, I've heard statistics that say that you should spend 3 to 5% of your revenue on training and development of yourself and your employees, which is a lot, and that's more of an investment in the future, but it does help. It usually pays for itself. Sometimes it's not easy to see it dollar for dollar, but it's just like marketing in the sense that you're investing in your employees and yourself, or like marketing is investing in your business and your business development, your future revenue. Travel expenses, equipment, office facilities. So why does spending matter though? I mean, if you think about it, why, many people are just saying, I'm just going to focus on revenue, but why would spending matter? Well, one, you may want to have some profit so you can reinvest in your business. That's always a good idea. So if you're just kind of like just spending as much as you make, it's hard to do that. And then I think overall having some margin, having some profit is less stressful for businesses. Another one's your business valuation. Maybe you're a company that one day you want to sell your business. It just depends on if you've kind of thought through that, but typically that is based on your profit, or your profits before taxes and depreciation, or that you take that number and certain change, they call it add backs, but ultimately that's how they come up with your valuation. And then you might want to handle a recession better. So if you went into, I'm going to say we're in a recession. I know it's not official yet, but I'm just going to go ahead and I'm going to call it. I'm pretty sure that you're going to see after the second quarter though. So we're in that situation now. If you had kind of come into this at a higher margin, then it does help you manage the situation a little easier than if you were coming into this at a very tight margins. Get like, and your cash flow was only, so it's just a generally healthy way to run the business. But what is that? What is a good margin? And margin, once again, let me clarify. This is sort of an example that shows you gross margin and operating margin. I like to say your operating margin should be around 20%. I mean, this is definitely different by industry and depends on if you're investing a lot in your business, and there's a lot of variables that you might want to consider. If your margin is 5%, or and for smaller businesses, that may be just a couple people, or I would include your compensation, the owner compensation, in this number, so to determine margin, because otherwise your margin can be really high because you don't even have your pay in there. But I definitely include your pay, because and what I do is, for example, for my business, I should pay myself a salary, and so that just allows me to have that base. And then of course you have your profit. And if you're an business owner, those profits you may reinvest in your business, you may take distributions. There's a lot of ways you can handle those profits. But I would say operating profit, 20% is very good. And then just look at where you are today and then just try to improve on it through a combination of higher revenue, lower expenses. This is an example of an income statement that I would say that you would want to have in your accounting software, that you want to review regularly. You'd want to know, okay, what's your revenue, your cost of goods sold, your cost of revenue, your gross margin there, and then your compensation, all these other operating expenses. Those all get reduced, and then it gives you your operating profit. The templates that I was telling you about does kind of give you a much further view of all of the different expenses, and then you can use that to go forward with it. And then I trend it forward. So now you got your actuals, you trend it forward, and you understand, where, not only where your profit is now and where your expenses are now, but where you're headed. And you can maybe even see, oh God, I'm going to have a little dip in the summer, or, seasonality gets all thrown in there, right? And of course, this is going to affect your cash flow. We're about to get to that, but it's going to affect your cash flow. So by seeing that trend, you might see problems coming down in a month or two or three that allow you to make decisions earlier than when you get to it. So this is why I find this hugely important. First thing I ever do in any business is do this exercise of coming through and understanding their current financials, trending it out, looking at what their P&L looks like from a revenue and expense standpoint. So you can't grow out of your profit problem. You need to fix profit first, then grow. So I think, there's different opinions on this. Some people just think like throw a lot of revenue, everything will work out. And to some degree that could work temporarily, but I do believe most of the time you need to kind of balance that revenue and expenses to get the level of profit. Number 4, step 4 is cash. So why did I talk about cash in the 4th step? I'm pretty sure most business owners are thinking, oh, it's all about cash. Cash is what they're thinking about. But the thing is everything we just talked about is a component to measure cash. So you have to know your revenue, you got to know your expenses, and you ultimately got to know your profit. But then there's other components too. Cash is everything. I mean, it's taking every component in your business, but it's not all about cash. And I have this example where I went into this. I was part of this training. It was basically a workshop or a seminar I'd gone to, and they were it was out of town conference. Remember those conferences where you'd actually go out of town and go to a conference and you'd sit there and see? You remember that back in the old days? now we have to do everything online. So I was sitting there and they were offering this coaching service that sounded really great, and I was just excited about it. But the problem was it was going to be $10,000 for 1 year. If I paid $10,000 today, I get it for a year. Or, which at the time I did not have $10,000, didn't feel like, I just didn't have it. So there was another option. The option was I could pay, it was like $750 today, and then it was $1,200. It then spread out a little bit each month for the next 8 months. So it was sort of a payment plan. And of course, I'm a financial person, which kind of makes me a little dangerous. I started to be like, well, that sounds great. except I wonder what the interest rate is on that. I mean, I just was like, oh, when I did the calculation, it was effectively a 40% interest rate. Even though it sounded good to just pay $1,500 a month, which I could afford. At least you always can afford stuff in the future. It's like, oh, I'll come up with that money. So but 40% is a lot. If you did this over and over again, it's effective. I mean, we were just talking about margin. So this is where the way I like to describe it. If you do anything that's like a 40% or 20% interest rate or whatever the decision is, and your margin's 20%, well, I mean, there you go. You don't have any more. You're giving it away. So I thought about it, and the next kind of slept on it, and then the next morning I decided not to do it that year. What I did do is a couple things in the following year. Got a line of credit set up, and of course worked on increasing revenue and some cash in my business. And so the following year I ended up doing the program, which I'm in the program now, and it's really good. So there's nothing wrong. It was a great program. I just don't agree with spending 40% more. Now they're all kind of sales pitches on that. They come through a lot of different ways. Well, I'm giving you a discount. The normal price is this. I'm giving you a discount. Well, it's the same thing. Like, well, you should take the discount, or invest. I just told you to invest in yourself, which I said that before. You should spend 3 to 5%, and you should invest in yourself. But if you don't have the cash to invest in yourself, and you're going to spend 40% more, that doesn't make sense either. It's that you just have to be logical, and that's why all this is important. This is why you have to take it all together. You have to understand the revenue, the expenses, the profit, and then ultimately the cash. And so making a decision solely on cash is dangerous. There are other things that affect your cash, and I wanted to talk about this too, is that you could still have you could have your revenue figured out, you could have P&L figured out, you could have all of these areas, but if you don't know basically you could have no cash. You could have a lot of cash stuck in accounts receivable. You could have inconsistent billing, which I talked a little bit about. And I know I'm a little bit at 30 minutes, so I'm going to try to get through here a little bit faster. And I want to make sure I have time if there's any questions. I can't see any chat because I've got this 2 places, and so I don't see the chat. So I'm going to have to figure out how to see the chat here in a second. But anyway, taxes, another thing. Hey, did you know, I don't know if y'all know this, at least as of right now, that if you take a PPP money, if you take that loan that gets forgiven, as of right now, that loan doesn't get included in your taxes, which is great, except that they're saying that you then, for whatever payroll or whatever expenses that you included in that, you can't include that as a deductible expense for your taxes. Now, I hope they change that rule. Everything that's related to PPP is always subject to change any particular day of the week. So please know that it may have already changed. Like, it changed this morning. I don't know. Things are changing all the time with that PPP. But the current situation was that unless they change the ruling on it, you wouldn't be able to deduct those expenses, which basically effectively increases your taxable income, which means if you just got, say, $30,000 for a PPP loan, that now, well, that's great and all, but you can't deduct the payroll and rent expense or whatever you're using for that. And so now your taxes went up by, if you were to, could be as much as 10,000, depending on whatever tax rate you're at and all that. But so those are the kinds of things that you have to set aside for, because they'll affect you in the future. It's obviously taxes, distributions, investing in your property and equipment, inventory, annual expenses. Almost always an annual expense, especially software, is always cheaper to pay for the year than it is monthly. But you have to kind of have the cash. I mean, it affects your cash at that point in time that you pay monthly. So all of that is part of the equation. Revenue is vanity, profit is sanity, and cash is king. All right, last step, accountable. How can you keep yourself accountable? I'm going to tell this real fast. This is just a journal that I got when I started my business 4 years ago. And this is an example of accountability. What I ended up doing is the journal itself was how to reach your goal in 100 days. And right now, I actually use something else called the Full Focus Planner, but it works the same way as this Freedom Journal, which is sort of like an everyday, what am I doing every day? What are my goals that I'm working on for the week? And this was one goal for 100 days. So it would break it all out into like 10-day sprints. And then you'd break that down to one day. And every day you would write down like the same things, like always start out with what's something I'm grateful for, what's my goal that I'm going to accomplish in 100 days, and what's the number one focus for the day and the tasks. And in the day you would do this, you kind of would write this down every day. What did I accomplish? What were good things that happened? 2 good things that happened? What were 2 bad things, or 2 struggles, I guess would be a better word for it, that happened that day? And then how would I overcome that? And so that constant process was just a form of accountability. And I had the goal when I started my business to hit a certain revenue target. It was very important, obviously, when you start a business, or when your revenue is always important for small businesses, but it's just, what was that target? And that became my focus every day. And after 100 days, I got really close to that target, and I got the journal again and did the same thing for the next 100 days and hit the target, which was hugely important for me even doing CFO services today, right? So this was back in 2016 when I did this. So this is an example of accountability where you can do it through journals, or through just this daily reminders that you're trying to hit a goal. But in a financial situation, you would have your own accountability by looking at your financial reports, your profit and loss, the income statement that I was mentioning, compared to last forecast, compared to what you forecasted, which is what that forecast model is, or compared to last year, or last month. Some kind of comparison is hugely important to look at that regularly. That's a form of accountability, just from a financial standpoint. Looking at your balance sheet the same way. There's some kind of key metric that you want to look at in your business. Like some of my clients, they look at like revenue per person per month, or some kind of metric that's like, okay, I want to look at that regularly and benchmark that compared to what last month, or what I want it to be, is hugely important. And then that forecast model, which that it's in those templates, is hugely important. I wanted to, let me see. Yeah, I'm going to show you real fast. I'll give you a quick glimpse of what I mean by that. But quickly, the 5 steps: financial mindset. Have a good financial mindset. Make sure you implement a revenue plan. Make sure that you do look at your expenses and control your cash number 4, and have a form of accountability. And the accountability that I'm meaning here is actually right. Let me pull it up here. Okay. So this is an example of the templates. And so at the very front, you have all these different tabs where you might list out all your existing revenue, all your revenue opportunities that you have in your business. So this is just sort of like an example how you could list them out. And then ultimately, this is new business. All your new business opportunities, list those out, which is, I showed you a slide like this, but what's happening is all the existing revenue and the new business revenue, all of that once you're listing that out, will flow over to your P&L. And so here's an example P&L where I just kind of filled up every single blank, pretty much, where you could have, okay, you have all your actual revenue gets thrown in here, and then you start to put your forecasted revenue, and you trend that out for the rest of this year. And if you want to do next year, start to work on next year. Nothing wrong with that. Some of my clients like to see 12 to 18 months out in the future. Now I would say your forecast is wrong as soon as you come up with it. So that doesn't mean that it's like not important to do a forecast, because I mean, most people nobody forecasted this COVID thing. So you always have to redo this. You always have to look at this. My favorite quote from, hopefully I can remember the quote correctly, but it's from Dwight Eisenhower. He said in planning for a battle, he found that plans were useless, but planning was indispensable. So it's the whole planning exercise of doing this is where you get a lot of vision and understanding of what's happening in your business. So you list all this out, and you can start to see, well, here's where I'm headed. on operating margin. And now this ultimate part of this is to then you look at your expenses, look at your salary expenses. There's a tab in here where you could list out all that. You could list out all your employees, all their salaries, all your contractors, all their salaries. So that flows through to the P&L tab here. And then another component, which I kind of went through extremely fast. I apologize how fast the balance sheet, because I know that's can be complicated. But then, having that understanding of your cash and your accounts receivable and inventory and fixed assets and all these other pieces of your business, depending on how large or small you are, you may or may not have all of these categories, but that will ultimately lead to your cash flow, which is another tab that's literally saying, how much cash you actually are forecasted to bring in. This example is saying actually it's 2018, let's just say 2020, it says, oh, that's hard coded. Okay, well, we're talking about 2020 here. So in 2020, it's saying that the cash that's coming from operating expenses is $26,000. So that's what this model is saying, is that you're gonna get cash coming in from your from your operating activities, and then you also might have loans, money that you get from that, or paying back loans. And so those are different because it's not operating. That's just getting financing from a bank or from some other source. So having that understanding in your cash is helpful too, because you could have all this cash, but you could be literally having cash simply because you just got a PPP loan. So, I mean, you want to understand truly what's operating, your operations versus your cash. So I just wanted to kind of real quickly go through that with you. Another thing that I wanted to bring up really fast before I wrap up is to tell you that I do have an opportunity that I've been working on. It's an opportunity where you could get all this type of CFO services at a much more affordable price, which I just wanted to kind of let you know, something I've been feeling out to see if people are interested in this program. I mean, my direct CFO services are typically like $3,000 to $6,000 a month. So that sort of kind of eliminates a tremendous amount of smaller businesses. So I was trying to think of an opportunity to help smaller businesses get the same help, but at a much lower price. So this is an example of what that it would be like weekly meetings on Zoom to go through all these different components. Week 1 through week 6, in the first 6 weeks would be going over that. Ultimately, you'd build a forecast model that would help you build that exact model, bring in your actuals, forecast your existing, all that be brought in. And you'd have access to a course and be able to do online, get answers to questions, and get any help that you might need from the PPP forgiveness guidance. All that stuff would be a part of it. And ultimately, that course right there is by itself is $997, but you would get all of that for $997 for 2 months, 2.5 months or so. So basically, it's like $500 a month, which I don't provide anybody for CFO services for that. So this is a newer program, and I'm really trying to think of ways to help small businesses right now. But it has a tremendous value. Like I said, customers pay a lot more for that. So I just wanted to bring that up really fast. You can really, reaching out to me might be the best, because you probably have questions. If you have questions, you can reach out to me, which that team at Vendor CFO Services email works, or which is on that. It's on the worksheet also. There's information on the worksheet to get hold of me.
Yeah, that's awesome. Thank you, Shane. And we can share this information too with our membership. So we would be happy to include that. Does anybody have any questions? I didn't see any.
Yeah.
You're all unmuted, I think.
I got everybody unmuted. Well, so if you.
I have a question.
Yeah.
You know how you said about the headlights and stuff. So out of all your with the COVID-19, what would you say was the biggest issue that most of the your clients have right now, other than worrying about PPP loans and things like that? What's the biggest block in terms of going forward?
Yeah. Yeah. All of my client, there's probably different issues for different clients. I mean, I know all of them immediately were concerned about cash, which that was the reason why the PPP was so important, is to figure out the cash. They all, because I trained them to do forecast modeling, which actually came back to bite me, because everybody needed it done at the same time. It was like, what are we doing? And so redo the forecast. What happens in that scenario? What happens? I've got a couple of nonprofits. Like, what happens if donations go down this level? Or I have a marketing, online marketing company, digital marketing company, and they were like, I mean, every day another client was saying they're cutting their spending. A lot of retail. I mean, retail just get hit hard. So they were new information come all the time, and so that was just, it was like literally just. I mean, it was just literally just reforecasting and just, how long will they survive? What do they need to do with staffing? I mean, that came up 1,000 times. I mean, all the time. Was looking at staffing and looking, of course, instantly when that law, when the CARES Act got passed, that was hugely important for me to try to get the cash. And I mean, all of them got the loan. They all needed it to different levels, might be needing it in a month or two. There's so many things about that, and it's hard to say what's going to happen over the next few months. I think that we might be experiencing some challenges in the fall, when some of the money, and of course the government keeps throwing more money at it. So I don't know, they keep throwing more money at people. You might be able to last longer, but at some point in time, what's probably going to happen is there's going to be even more layoffs from people that got the PPP, and so just what happens in that scenario. So a lot of that. I don't know if I answered your question, but it's cash and probably just more. They just really wanted to kind of get some more comfort on how long they could last.
Yeah, you have answered my question. I'm just trying to have a feel of what it's like out there, on what to concentrate on, because whether you're gonna, because as a business owner, you wear many hats. You're the marketing person, you're the salesperson, you're the boss. So whether you're what the other owners or businesses are tackling, which fire do they try to hit first? Whether do you go hard on the marketing, or do you spend time with your